Hello and welcome to today's IAB Europe webinar looking at the data and trends in our ADEX benchmark report. I'm Alison Fenn, Executive Business Advisor at IAB Europe, and I'm going to be the moderator of this session. So to clear the timings, we're going to have a 15-minute presentation and then a 20-minute panel discussion with some expert panelists, and I'm at the end for a Q&A. So first of all, I'm going to give you an idea of the technical setup of the webinar and then introduce the panelists before the presentation starts. Don't forget that the full IAB Europe ADEX benchmark report is available to download on our website, the Value of Digital Advertising section. If you want to share the live presentation with your colleagues, a webinar recording will be available at the end and you'll be able to do that. So on to the webinar control panel. First of all, you should see a control panel on the right-hand side of your screen, and you can minimize the panel by clicking on the double arrow in the upper left-hand corner and expand by clicking the same button. So take a moment to practice that if you'd like to. That there's a chat panel and a Q&A panel. So could you please submit any technical queries or issues in the chat panel, and we will respond to those. You can get queries for the speakers using the Q&A panel located near the bottom of the control panel. So the questions live during the Q&A session, at the end of the presentation. And if you need help during the session, you can raise your hand by clicking the red exclamation mark icon just above the chat panel. Well, just to summarise, technical issues should be submitted to the host in the chat panel and questions for the speakers in the Q&A panel. The speakers: Daniel Knapp, Senior Director Advertising Research from IHS, who authored the research for IAB Europe based on an aggregation of data from across the IAB network in Europe. Our panelists are Daniel Williams, who is Global Online Media Manager at Shell, Joel Edwards, Strategy and Product Development Director, OMD, and Anita Karas, Head of International Research and Consumer Insights at OL. So over to Daniel to kick with the presentation. Well, Daniel.
Thank you for the introduction. Can you all hear me? Great, fantastic. So the technology works, and let's just, if at the state of Europe today, there's little to celebrate. Optimism and growth are maybe the words used most commonly in today's climate, at least in the climate. But the world of online advertising we celebrate today, and that is because we are launching the 10th edition of ADEX, that's the Pan-European Content Study. The data we'll share today points towards just those things that are absent elsewhere on the European stage: optimism and growth. And as you can imagine, that's mainly thanks to three factors: video and programmatic, those aspects. And we will share the size of the market, growth and hurdles, and also a view on different trees and different ad formats, how they are performing. Let me talk to you briefly about this study and why we are doing it. There are different metrics or rates involved when it comes to measuring online ad spend. Gross, net, rate card are three of those categories, and the confusing thing is within the 27 markets that we cover, each one interprets each of those categories differently. So it's fairly internet fragmented in Europe. We indeed, if we look at market data in a practical situation, we are drowning in market data and information that reaches us every day about growth and what's happening in the market. Very little really instructive data, the method that is comparable to countries, in particular European level. Exactly what we do in this study. It's a meta-analysis of online spend from the local IABs that we harmonize and make comparable by adding things that some local IABs don't measure. For instance, harmonize the rates to gross advertising that's the revenue build, and it includes all. If you flip it to the other side, it's the net ad revenue that the publisher makes, but this still includes the agency commission. Now, why are we undertaking this effort at all? And why a European perspective? I mean, there are at least two reasons for that. First, well, at least in Europe, in the EU, in the single market, we have a cross-border market, so we also need to consider our market in a cross-border way. Secondly, we're seeing media buying behavior to transnational and regional perspectives to the low approaches we see every day. In Europe, with many fragmented markets or small markets, the scale and market fragmentation to both entities, we need to be able to connect markets all through similar or compare metrics. And we need this exercise to benchmark markets against each other, against the UK, Poland against France, the North against Southern Europe, and so forth. Because online advertising is perpetually developing. There's no new normal state to it going. Yes, there are standards, measurement standards, and so forth, but there are constantly new ways of reaching consumers, new devices, new forms, and so forth. And we need to understand how others are doing in order to know what we in our local markets. So, a very complex situation where we've got submissions from 27 countries in Europe, which we ingested, aggregated, and calculated, that are 98% of the markets of the countries visible here on the map. You can see that our view of Europe extends beyond the European Union, notably including Russia, one of the largest European on ad markets. Let me start with the big picture. One key number to this year, and that's the number of 36.4 billion euros, the value of online advertising in 2015, as we established in this study. As a magnitude, the still the largest online is worth around 52 million euros. So what is 6 billion? If you look at companies, think that the European online ad market is larger than 55% of each national economy in the world. And 1.4 billion is exactly the GDP of Serbia. So we have a sizable market in Europe. And also is the key word here, because as you can see here, we've seen more favorable economic conditions coming out of, particularly in the Eurozone, as of the first quarter of 2015, that helped drive online ad growth. You can see on this chart that we have double recession in the Eurozone. We've got here the top four markets. Since the first quarter of 2015, crawling out of this recession. The macroeconomic environment, because there's a correlation in particular between household consumption and in production on the one hand, and investments on the other. So we're in an overall climate, despite Brexit that happened there and so forth, in 2015, that allowed the market to grow. And we are quite different to other formats. We saw overall the double-digit recession, but here the growth of online ad revenue over time. It was only here since 2006 that market actually declined. And although more and more markets have been added to our study over time, we tracked the growth rate in the market view based on all the 27 markets that we have in the study today, and revealed that we have a compound annual growth rate, so an average annual growth rate, despite macroeconomic turmoil, of 20.9% year-to-year for online advertising, and that means that within the last 10 years, we've added 30 euros to a 6 billion euro market. Now, what of course is interesting is to compare how this kind of online advertising compares to all the advertising. And here's the context for you. Whereas I added 13 over the last 10 years, the general European ad market added, frankly, nothing. In macroeconomic environment, many media declined. But we see a double trouble, if you will, of several factors, the economic factors that are rebounding, and structural factors. The next cyclical in the sense that what goes down must go up again. But a rapid change in consumer behavior. And which is just a channel in 2006 can no longer be ignored. Digital growing disproportionately as we're seeing budgets shifting radically. So there's an internal migration within the ad market, but the market itself in Europe is actually quite flat. Having said that, it doesn't mean that traditional media is necessarily doing badly. We have seen many investments of traditional media companies, in particular in the TV space, in online and other things, to capitalize on the digital market. And if we look at the size of the market now from a growth perspective, we can see there wasn't a single year since 2010 market growth has been single digit, always double digit, and we're seeing fairly constant growth rate over the last couple of years, even slightly accelerating, which is interesting because usually when you look at the growth of advertising media, you see some kind of a saturation where market growth slows over time. But we have two factors involved. Number one is we have very strong emerging markets in Europe, and online advertising is reinventing itself, if you will, with new formats, with new modes of transaction, such as programmatic and so forth, which help this double-digit growth. This growth isn't really reflected in other media, and that it is online or digital that is drawing the market to growth. You can see here how the total ad market would have grown in Western and Eastern Europe and in total Europe, excluding online, and also including online. So you can clearly see how online here is the tip on the scale that turns a flat market into something more favorable. Something else historic at this 10th anniversary of the Annex report, and that is that for the first time on an aggregate level, see online taking TV to become the most advertising medium in Europe, with, as I said, 36.4 billion, 33.3 billion for TV. National markets already had this situation last year, or before the UK and Sweden stand out. In Germany, in Mexico, last week, we heard from our German colleagues that online facing TV very clearly and is still the largest, but edging towards the last one. Now, we are advocating the online market here. We have to be as well and see TV is very few formats lumped together, but it's very, very heterogeneous. We've got search, we've got display, we've got brand advertising, performance advertising, and so forth. Let's macro picture, look a bit at the individual markets. Now we see is a strong concentration of spend on the top three markets. You can see here this concentration actually increases time. You can see here top 3, top 5, top 7, top 10, and so forth. What of the total spend of 36.4 billion generated by the top 3, top 5, and so forth market. And we can really see over half, nearly thirds of revenue comes from the top markets. And then we see, look at the top 10 markets, maybe 90%. We see it, look at the 27, a very long tail of the market. Speaking of the 10, let's now look at a ranking. 10 markets by country: UK, Germany, France, Italy, Netherlands, Russia, Sweden, Spain, Switzerland. Interestingly here, we can see markets that are a population base: UK, Germany, France, Italy, but also markets with much lower population than some of the other markets in the study, but which are very mature, which have a very well developed on-net market, such as Denmark and Switzerland. This range is over time. If you look at last year, the only change we saw was that Russia and the Netherlands switched places, mainly due to volatile economic and political conditions in Russia in 2005. But what's also very noticeable here is that it's nearly twice as large as its closest competitor, Germany. And this is the fact that the law framework is set in those countries. UK's population of 65 million, Germany even has 80 million. The average household income is very similar in two markets, or deviates by around 2,000 euros. Nevertheless, we've seen the UK as a hotbed for innovation, partly because American companies move there early if they go to Europe. We're seeing less reliance on print ad revenues, which are still going strong in Germany. Seeing UK publishers being more aggressive than some of the other counterparts in launching more centric sites and so forth. So we can see, if we look at the UK as a flagship, that from an infrastructure perspective, other markets still can catch up. And it's partly also a political issue, particularly if we look at the infrastructure in Germany, where many organizations have pressed the German government to build out that infrastructure more and more rapidly. You can see strong growth in the other European markets as well. So when we did this study, we saw a very strong fluctuation of growth. We see a fairly harmonious picture. There's only two markets really here that declined: Greece and Romania. All the markets really grew, and not too far scattered across the European average. We see it. I like this as an analyst in particular to look at this at a bubble chart. You see the size of the market is represented by the size of the bubble. On the x-axis, we see ad spend per capita, not ad spend per capita, which is an indicator of market maturity, and the y-axis, we see market growth. The lines are the European averages. You see here, visually, that, of course, the emerging markets are growing strongly, with a low maturity of ad spend here on the top left of the chart. But surprisingly, you can also see that the mature markets, UK, Norway, Sweden, Switzerland, and so forth, are growing above the European average. And back to the point I made at the beginning of this presentation, that advertising is perpetually reinventing itself with new formats, new measures, and so forth, so that it is new normal or that markets are stagnating. Even strong markets can grow above the European average. Now, IABs that contributed to the study as well to see what are the hurdles and growth drivers that are self-identified in markets. And let's look at the drivers here in blue. We see programmatic and marketing automation as a key driver. E-commerce and commerce drive ad spend as well. Some of the largest advertisers now are e-commerce players. More video consumption, consequently also more premium available in the video space. We're seeing brand budgets from TV moving to online, and TV and online budgets becoming integrated. Ad quality is improving, more growing very strongly. The social platforms are doing a great job, and of course, we're also seeing disruptive advertising, branded content or native advertising, a space and finding new ways of engaging with consumers. However, side, we also see that it's been talked about for a long time, that the industry is still working to resolve ad blocking, ad fraud. And we see misuse of data in several ways. This could be arbitrage, also the use of data, or the not really how to use one's proprietary data in the most effective way. And we are seeing some problems arising from the plateau of best advertising on one hand and the move forward on the other, how to really structure the shift in the best way, bearing in mind production costs and other barriers. And some of the macroeconomic issues and political conditions that also hamper growth. Different formats covered in this study here in the light of this presentation. You can see that with the three broad categories displayed, with banners in here, but also sponsorships, videos, and so forth. This is performance-based or branding campaigns, which have classified in directories and paid for search, but that makes up the total. We see that display actually is increasing its growth rate year after year, mainly due to the social platforms, due to programmatic, and due to the influx of spending budgets. We see that in directories underperforming, but that's partly because classified sites are increasingly moving to a display-based advertising models themselves. In particular, they're successful in the programmatic domain due to the large amount of data that they have. Growth here is not a sign that classified directory sites are doing badly, quite the contrary. If we look at shares of the different formats over time, we can see that you see the rise of search around 2008 and 2009, when the first big recession occurred, and display was being squeezed here. Search as a performance-based medium was doing very well, but it was seeing over time slowly display clawing back a large share of the market due to the factors that are outlined. And it's already not just in one way, but in two ways. We see mobile display and mobile search outperforming significantly all other different formats available, even the advertising. Into online ad display growth, here we can see this reflected with many markets really pulling double-digit. We see a few more markets in decline than on the general picture, but all again, markets are fairly close together, in particular compared to last year, where we had huge discrepancies between those markets. You see, the partly said the rule of thumb would be one half the market grew above 20%, and around three markets grew above 30%, which is a very healthy picture. Within this category, we see that video is taking increasing share. This is in-stream, as well as outstream video, that now has a double-digit share in most markets of the total online display market. And here, that both emerging and established markets exhibit this high. If you look at mobile, you have a longitudinal picture from 2012 to 2015. You see quickly more in the end. I mean, we're in the industry for more than 10 years talking about the year of mobile. But you can really see here that over those 3 or 4 years here, mobile really came into its own and is near dominant in markets. Interesting European average of 26.7% of mobile share of display. In the US, it's 35%. You see here in the study 3 markets that higher mobile share of display than the US currently has, which is often seen as the signature market for this. And we can also, the flow from desktop to mobile is clearly seen here. We see display in many markets as well, but if you factor out mobile, some markets are stagnating or even declining. So it's a clear case for mobile and a case for desktop. If you exclude video. Very quickly, we see here a much more fragmented picture, which is the fact that in some, especially the established markets, there's more programmatic display of classifieds that has been quicker than in others. And we also see that markets with a strong directory heritage are, in particular the Scandinavian markets, are moving budgets to search. This has been a process going on over the last 5 years or so. We see a picture a bit more than display, but not as fragmented as classifieds and directories. And you can see the growth, if you look at Sweden, for instance, or Norway, Denmark, all very mature markets with a very healthy double-digit growth of search, which partly stems from the migration of directories. At how search looks in the domain, we can see strong variance across the European countries. That's mainly driven by behavior. When some markets like Ireland, for instance, or Austria, have understood that if you buy search on mobile, it works very different from the desktop. In particular, location-based search on maps is very popular on search, and advertisers who monitor or who look at buying search in this way, it's nationally specific. There are particular national buying cultures around this, which really drive mobile search in some markets versus others. And I would like to conclude with this. At the outlook for 2016, we see favourable economic forecasts for the year. Despite Brexit, we expect a growing market. We saw that the last sporting events which drove the market in some markets. We also saw, again, with the video and the different formats, but there are some holes as well, in particular, as the market grew so much already. This means that the comparatives are going to be tougher. And data, the main issue, and also the fragmentation of the ad infrastructure. But overall, again, we see a healthy picture for 2016. And I'd like to put on that note and hand it back to Alison for the panel discussion. Thank you.
Thanks very much, Daniel. So we will just connect our panelists into the webinar. For joining us, Anita, Dan, Jean-Paul. I'd like to kick off just following on from Dan's last slide about the trends. And Jean-Paul, I wondered if you wanted to add some comments on innovations and trends driving this very consistent online advertising growth.
Yes, so I think the news here is that the main drivers of this growth over the last few years are well understood, and they are long-term drivers. This is not some blip in the market that happened in 2015 that drove the growth. They're good strong fundamental drivers of the maturing and scaling of a number of different technologies, and also I think we've seen some interesting feedback loops that come from the interaction between those technologies. So as Daniel mentioned, those drivers are well understood. Programmatic is a very significant driver. It's been the technology of much promise for some years now, but then again for the last few years across the region has scaled, and it's proven to be effective for many brands because they can now efficiently source demand across many different touch points and many different media channels, and do that in a consistent way and measure across a consistent framework. We also see just ever improving technology driving the adoption of ever more video and also the use of programmatic technologies in the video space so that people can start to utilize the power of video for their communications. And increasingly what we are seeing is the emergence of video across different platforms. So we no longer think in terms of TV planning, we think in terms of AV planning, of which TV is still a significant part. And also mobile and social have their own parts in terms of driving new kinds of text, whether that be location or social relationships, and brands are able to leverage that. And I think a final really important point, I think, is that what was a vicious circle now becoming a virtuous circle, a positive feedback loop, so that maybe 5-10 years ago, our measurement frameworks weren't necessarily optimal for digital channels. They were looking to measure and optimize another metric that digital wasn't necessarily suited to. But now, due to the scale of digital and due to the fact that so much business is done through on channels, that management frameworks are now very much focused on these kind of KPIs, and therefore digital is proving itself to be hugely effective channels, and that's what's getting ever more budget into the different formats, whether that be display, classified, search, and also increasingly a range of interesting new formats from AR to VR to AI, which brands are just starting to explore, which will probably be driving growth through the 2020s.
Paul, do other panellists have a comment to add to that?
The point there on kind of digital measurement frameworks is really, really key, particularly getting buy-in to those frameworks. So metrics that we've been reporting for a while now, I think perhaps don't have the same confidence that people have in econometrics, for example, or kind of traditional ways of measuring. So I think I'm starting to build up confidence, if you like, across the business in these kind of new metrics and showing that they have true business value is where we're starting to see real traction.
Also, in terms of where some of the formats are developing, particularly in the mobile space, something that I've been sort of track on is the use of beacons, which I know sort of may be seen as a fad in terms of in-store experiences and pushing offers. But think about the value of collecting data for tracking services. What that means from an omni-channel strategy perspective in creating segments, it becomes a really powerful play and takes mobile away from just looking at reversioning video and other sort of creatives into its own value space, if you like, as a discipline and as a media, which online and PCs can't play in. So I think that's also an interesting sort of innovation that we'll see kind of going forwards to help drive and power mobile overall.
Peter. So let's just come to those innovations and trends and think about some of the smaller European markets. Dan, what opportunities do you think these small markets that are showing high growth, what opportunities are they taking advantage of that could provide some lessons for other larger markets?
We've seen over the last couple of years a learning curve in the emerging markets, and also short time scales of deployment of technology in particular. When it comes to programmatic, for instance, as an example, they certainly have a second mover advantage, where the ecosystem had to be built often through trial and error, and the established markets went through a lot of convening and testing to get programmatic off the ground. And now that we have principles, sales roles, buying strategies, it is much quicker to take those learnings and apply them in other markets. That's the key thing. Another issue is that we've seen a rapid broadband connectivity across many of those markets, which really unlocks the online market. In Europe, or let's say in Western Europe, often broadband households and mobile households are synonymous. This has been the case until recently in many Eastern European markets. But we are seeing a convergence here as well, and that has coincided with faster broadband speeds. So this is the first time that really an online market becomes a national market, where the television market has been for a couple of decades in those markets. So I think those are two things that the smaller markets, particularly the emerging markets, are taking advantage of. We're seeing additionally that some media companies, think of Springer, for instance, have started to operate more transnationally. They're bringing together markets that are structured similar, and advertisers have an interest in addressing conflict. So back to my starting point in the presentation today is there is some sequence of markets together and not just seeing them as national entities, but buying and selling across them in a bundle.
Thanks, Neil. I think it would be great if we could go over to Daniel Williams from Shell now, just to talk about that positive consequence in terms of increasing brand advertising spend in digital. Do you see that happening significantly now in display, Daniel, and how do you expect that to develop?
Yes, we do. Is the short answer. Essentially, I think coming back to what Daniel said in the research earlier, it's largely being driven by consumer behaviour. So we're seeing that the people that we want to influence with advertising are spending increasing amounts of time with online channels, particularly driven by the adoption of mobile and as you just referenced as well, the kind of access to Wi-Fi and high-speed connection. So we're seeing increasing amounts of time, particularly with online videoing being consumed on mobile, which means that more and more of those moments where we want to be appearing are on those channels. I think what you mentioned before about looking at whether desktop is stagnating when you take mobile out of it is really interesting when we're trying to understand, are these new moments where we can reach people on mobile? Are they on the commute or wherever it is that there was just not an opportunity before? Or is it that people are changing their behavior where previously they would have been doing this on a laptop or PC? I think there's probably an element of both. So to understand, where the growth potential is and where the saturation in the market is an interesting one. I think as well in your research you had a quote from Facebook talking about the amounts of measurement and the ability to better understand where the kind of value from digital is. I think particularly when we're thinking about the growth of display, that's a really key factor for us. I think search and social kind of get it easier in some ways when we're thinking about viewability and ad fraud and things like that, because either the person's signed in or so I think that's where display had a lot of challenges historically that I think with us getting now better access to data that we're confident of, that's why we're now willing to commit more budget to that area and more confident in the results that we're getting.
Thanks, Daniel. Anita, would you like to add to that in terms of how the clients leveraging mobile display particularly to reach consumers?
Yeah, I think I would put it in a number of buckets that we started to tap on in this call. So when you think about consumer consumption patterns changing, obviously people are using mobile differently to online. It's often quick and often versus that longer and less frequent times. And there are sort of biggest drivers on mobile around sort of video content, but still that lack of pre-roll video in that mobile marketplace. So therefore, that's why sort of new formats like interstitials, light boxes, click-to-video, etc., have come to the foreground. What we're seeing in mobile is, the native applications are very sticky and do go viral, but the audience is fickle. When we sort of look at our own internal data stats, only sort of 3% of apps installed last for more than 30 days. So people are constantly sort of moving on. And that's sort of the biggest challenge is around sort of capturing those apps in the moment. And also thinking about consumers now that they are creators and how do you engage and talk, which goes then in partnership with distribution channels. So when we think about AOL, I suppose as a publisher as well as everyone else, we really are having to get sophisticated in the distribution channels that we have and those strategies to really capture that audience as well as with that audience in terms of sort of the ad creativity to really give us strength and optimise those ad offerings and go against those rising ad blockers for commercial content. At AOL, we really sort of think about how we understand those consumer needs, and obviously sitting in research, I have a strong role to play in that, think about those motivations and behaviours behind consuming content, and that's where I see how how we can ensure that those mobile channels and online channels overall can really align with those consumer expectations, and the motivation for going online and then meeting them, which will then lead us to a healthy ecosystem and keep those spend levels increasing and hopefully growing in line with where the eyeballs are and the usability is.
Thanks, Anita. So let's go back to the analyst perspective and get Daniel Knapp's thoughts on mobile and video spend evolving. Do you want to add to that, Daniel?
Well, I think a key thing that we need to see, which has been mentioned or alluded to on this panel, is company strategies are changing to take advantage of these opportunities. And we've seen a lot of in the media and ad sector recently to do just that. I think up until last year, we really were in the ad tech M&A craze, which has died down since. And now a different type of M&A has started to take advantage of exactly those opportunities more from a creative and from a reach perspective. And I think the press announcement around the next score always a very good barometer. So last year we had the News Corp Unruly deal, and here one of the headliners was the WPP partnership. Very clearly we can see how different players in the value chain try to establish direct relationships to consumers, how how interrupt advertising is being supplemented by numbers of storytelling, and see how actions, and I think AL is a great example here as well. How acquisitions, both in content and in the tech space, are really building new ecosystems and new powerhouses. In particular, if you look at the operators, Verizon, Comcast, and so on, who has the ability to pair consumer data now with access to dozens of devices across owned and operators and third-party content outlets. So I think we have to see mobile and video within this broad ecosystem, or even a Game of Thrones empire building that has certainly gone and keeps this market very exciting.
It makes it very exciting, but it's also, we also are grappling with that point that you mentioned earlier of the duplication and fragmentation of ad tech infrastructure, aren't we?
I mean, there is I think, this is kind of a double sword in a way. We already seeing a cleanup of the ad tech infrastructure where many kind of point-to-point solutions realize they have to be plugged into a more holistic infrastructure, and that just offering Me Too services doesn't work. So we're seeing some cleanup there. But at the same time, it's in particular in a world where we do have an absolute minimum standard. It's very important to have competing, sometimes even open infrastructures that allows action of media in a transparent way, then channeled through or just through closed platforms, despite the merits that they have. So yes, we need less fragmentation, but we also need to be cautious of over-concentration as a consequence.
Thanks, Daniel. So let's just continue the discussion on programmatic. We know now that programmatic accounts for 43% of display advertising in Europe. So I just wanted to come back to Daniel Williams to talk a little bit more about how he sees programmatic unlocking more brand spend for us moving forward.
Sure. I mean, it's a funny one because I don't think it's necessarily that programmatic kind of in and of itself is doing that, because, programmatic as a way to transact has been around for a long time, and we're just seeing that explosion kind of, happening in the last couple of years. So I think it's a few things around programmatic that mean that brands are more willing to put brand investment into that channel. For us, one of those crucial things is the availability of premium, or what we would consider premium inventory. So there are particular places that we're going to want to be placing our advertising. And I think one of the challenges with programmatic in the past was, unless you were comfortable to do run of exchange and kind of extensive whitelisting, it could be quite a challenge. And simply some of the websites and some of the inventory you would want to be buying just simply weren't open to transacting in that way. So I think, with more publishers being open to that, that's been a huge driver for us. We talked a lot about measurement already, so I don't want to dwell on that, but I think that's a key factor as well, particularly when we're thinking about display and being able to attribute that value to it. I think program gains significant credibility in that, and I think as well brand safety. Again, we've touched on viewability and ad fraud, and again I don't want to dwell long on that, but I think having tools and kind of greater understanding of how those fees work together and how we can do better to kind of control where we're being seen and make sure it's places that we're comfortable. I think all that makes programmatic like a much more attractive channel to us. As well, there's just quite a practical element to it in terms of the way in which you transact programmatically becoming kind of more understandable and more widely available. I think historically, the ways to do it were probably shrouded in quite a lot of mystery, and now while it's still seen as probably one of those more technical areas, I think it's something that now you can take to a senior stakeholder and they will have some familiarity and some understanding with. And I think when we're thinking how we see growth across wider industry, I think that's actually quite a significant factor in itself.
Yeah, really significant step. So coming up to
To
Jean-Paul.
that, Alison, I think it's quite interesting we think a lot about viewability. I actually think programmatic helps move on from that, because when we think about the momentum behind programmatic in terms of the measurement, the attribution and the optimization, viewability is only one lever within that sort of loop. And I think the challenge for the digital industry is how we embrace all of those elements to really genuinely have a holistic learning through the data that we have across multiple touch points versus going on sort of one metric alone and feeling that that's the thorn in our side.
Would analysts like to comment on that as well?
The quick one from me, I suppose, is that, as Daniel says, we need to consider programmatic as a facilitation technology rather than an end in its own right. It's the fact that it allows us to make those decisions with increasingly sophisticated algorithms that take into account all the things we mentioned, from the location of the consumer to viewability issues to understanding kind of fraud issues and those kind of things. It allows us to constantly run experiments so that we always treating strategy as a hypothesis, so that we're always trying to improve on our understanding of what a consumer wants at a given time and have multiple answers for different people. That's, I think, the real power of programmatic is how we can deliver a far wider range of messages to a far wider range of people in a far wider range of contexts.
Jean-Paul, I'm just reviewing the questions that we've had through from today's audience, and I think that we have quite a few of those questions answered. I think that the ones that we haven't answered might take further explanations. So what I propose is that we'll get back to those specific questions directly with the people that have asked them, if that's okay. So to finish off, I was going to ask each of our panelists from today to choose 3 words to describe what they think online advertising will look like in a couple of years' time. So I'm going to kick off. Who am I going to pick first? I'm going to pick Daniel from Shell first for your 3 words of where we'll be. What will we be looking like in 2 years' time?
Yeah, I'm going to be quite optimistic with mine, so I'm going to start with creative. I think that whole storytelling piece that we just touched on is going to be really interesting in the next couple of years, and how we can kind of, I think the technology side of things we've kind of talked a lot about, and I think that whole area of creative in the future is going to be really exciting. Unified as well. I think walled gardens are giving us a lot of challenges at the moment, and being able to kind of truly understand, what one consumer is doing and how they interact with our ad across different channels is going to be a powerful thing for us. And I think native as well, in terms of, better understanding where customers and where consumers want to be experiencing content, and how we need to kind of make sure that the experiences we're showing them are kind of in line with what they're expecting.
So let's go to Jean-Paul now, see if we have any overlap. Jean-Paul?
I'd fully agree with those. But the three, I actually run the three separate things, did a three-word phrase, which was sustainable data exchange. So I think we'll start to see, as GDPR is implemented and we fully understand its implications across the region, then I think we'll start to see a number of different relationships existing throughout the value chain, with consumers willing to different degrees of data, indirectly or through intermediaries, having different degrees of control over the messaging that they see. And it's our challenge as industry to capitalize on opportunities so that we don't abuse certain relationships, and we can make most of the times where we can offer valuable real-time services to people at times when people want to be maybe more anonymous and less fully understood. So I think just the sustainability in terms of how we're exchanging data across the industry will be a lot clearer by 2018.
That's a really important point. Anita, do you want to add?
Yeah, so I want and hope that we will get to having permissioned personalisation at scale. So permission to me, from a consumer perspective, the control being in consumers' hands opens to me the doors in terms of letting brand tolerance in and removing the ad blocking. Personalisation, I think, is an inherent value of online and the capability of online and digital, where we need to get to the scale to make sure that the media spend continues to follow the eyeballs, and obviously media consolidation helps in that space.
And Daniel, do you want to put forward your three?
I think the other panelists made excellent points, and just for our version, I'd say data-rated, if that's the word, ethical and expansive. Data, I mean,
of all of them.
Well, okay, so data creative, and I mean, we've seen creative-led approaches and data-led approaches, and I think the two still speak different languages, they come together. Ethical, I think, from what we're seeing in the press, from what we're seeing at European institutions, we're seeing that a stronger dialogue is overdue, and we're doing that as an industry already, but even stronger, to through this us versus them rhetoric when it comes to the ad industry and the consumers, and to find common ground and mutual interests to have a sustainable and ethical advertising business. Lastly, expansive in the sense that we're speaking about now, but I think more increasingly an umbrella category for a new set of devices, from the control personal assistants, systems to the fridge and so forth, which open up an entirely new way of advertising, both in terms of the devices themselves and the creative opportunities that we couldn't imagine in the study that we have presented today. So we might need some new categories in the study a couple of years down the line.
Thanks, Daniel. Well, lots of food for thought there. So I will wrap up by thanking all of our panellists, Daniel Williams, Jean-Paul Edwards and Anita Karas. Thanks very much for your participation today. And by thanking you, the attendees, you are able to access the report via the IAB Europe website. Just visit the Value of Advertising area to download it, and the webinar recording will be sent around in the next couple of days via email, and that's also accessible by website. So please do give us your feedback at the end of the webinar. The survey is really valuable for us to formulate the rest of our webinars in the future. And thanks very much for joining us today.
Thanks.
Thank you. Bye-bye.
Thank you.